Good morning. Today is Tuesday, March 10th, and quite a wild day yesterday. But that's what happens during this Middle East geopolitical turbulence that we're having right now. But anyways, let's get into it right now. There's no economic data for today. The only thing that you have to really pay attention to is any kind of news or tweets that come out, primarily from Trump, because he's the one that can really move the market. I think yesterday afternoon he came out and said that the war is coming close to an end, and that really spiked the market. Oil had a tremendous swing yesterday, a high of 120. I think it closed at closed at 80. So that was I don't think oil got to $120 a barrel in several years, but that kind of swing, I think it was a historic swing, a 1 day swing. So, anyways, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like the video, and go down into the description area and join our Discord community by hitting that more button to open up the description and find the link for Discord. We do live trading from 9:30 a.m. to 11 a.m. Eastern Time. Currently, it's free, so come on in and get some good knowledge for free. You can ask some questions, commentary, and such, and I go over some basic trades along with some advanced trades as well. Today, I think after the close, you have Oracle that could potentially move the market for the software side of things. Aside from that, I didn't see anything else that's going to be earth-shattering on the market side. I think tomorrow we're waiting for some CPI data month over month and year over year. That'll move the market. Then on Thursday, we have unemployment claims. Moving into Friday, where we have core PCE price index month over month, GDP quarter over quarter, durable goods, and then we have some jolts at 9 o'clock on Friday, and that'll cut it off by the end of the week. So let's get into things. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video for me. I appreciate that. Let's start out with the VIX. Keep an eye on the VIX right now. You know, when there's geopolitical turbulence out there, you want to pay attention to the VIX, because when things get elevated, it's a pretty good tell on what's going to happen with the equities right now. So you saw yesterday morning the VIX was really elevated in the morning, which was telling you that we were getting close. And I said that what I'd like to have seen was yesterday. I really wanted to see the VIX get up higher up into that 36 range. We didn't quite get there. It kind of market open and it kind of went straight down most of the day. And you saw the reverse effect on the equities. The equities, they went lower in the morning, and then they rallied up pretty much in the afternoon. So today you could see that the VIX right now it pulled back, and now it's starting to find its footing and starting to move higher right now. And I think the reverse effect is happening on the broader markets and the Qs and the SPY. So the one thing you have to keep in mind, I'll make this bigger here. Pay attention to the VIX right now. So the VIX is just like a regular equity. We're above the 20-day SMA, we're above the 50-day SMA, we're above the 100 and the 200 SMA. So if I was looking at an equity right now, I would say as long as you're above these moving averages here, I would be bullish, right? So if I'm bullish on the VIX, that means I think the VIX can move higher. And if I think the VIX is going to move higher, it's going to have a reverse effect on the equities right now. So I don't necessarily think that we are done on the downside on equities just yet, as much as I'd like to. I think our comfort zone, where you want to see the VIX to be comfortable with your buying and selling stocks based on their merit, I think you're going to want to be down here in this between this $15 and $17 range. Not quite there yet. However, it did respect this Bitcoin glitch from November at $28.27. So it was a good possibility. You know, yesterday we did pop up there, respected it, and knocked down. So there's a good possibility maybe you pop up to that level again and respect it, and then we pull back down. So we are at yesterday's close on the VIX. So pay attention to the VIX. You know, you don't have to like have it up there on your screen at all times, but if you could see that the markets are kind of falling apart a little bit, it's not bad to take a glance at the VIX and see what's happening over there. So that being said, let's get into the ES. ES right now, you know, like I said, it's starting to fall a little bit in the pre-market. But, anything can happen once the market's open. So we have to see, actually, if you look yesterday, this was yesterday morning, pre-market, it was falling, and then look what it did once the market opened, right? So pre-market can kind of give you a little tip, but, once the market opens, then you get your volume here. As you can see, there's not a lot of volume here in pre-market, and this is where your volume is, and that's going to give you the direction on what's happening here. You can see this big spike that came here in the afternoon at about, was about 2:15. I think it was probably a Trump tweet talking about that the war is going to be over soon. So everything rallied pretty hard. I was actually at my computer not doing anything, and I saw a big spike in the market. And without even looking at the news, I knew it was something having to do with Trump saying that the war is probably coming closer to an end. And I'm not sure if I mentioned it yesterday, that it would not be a bad idea to keep a long position if you're during your day trading, just to protect yourself on a tweet just like that. Because look at that big tweet, and I know we're looking at a 15-minute chart, but if I break this down, and even if I go to a 4-minute chart, let's look at that. I mean, here's a 1-minute chart here. So this is a tweet. Here's 1, 2, 3, 4, 5-minute chart, right? So it rallied literally 67.25, 75, rallied 50 points in 5 minutes on the S&P. So, like I said, you have to be careful right now in your positions, because especially with this volatility that's happening in the Middle East right now. But anyways, getting back to the levels that we have here right now, we are below this January monthly low, which is sitting at, call it 68.12.82. Below yesterday's close. There are some point of control levels right now. So this point of control was open from Friday, and it's 67.61.95. It filled in the afternoon yesterday, right? So you can see this level. I had it plotted yesterday morning. We filled it yesterday afternoon at 12:15. So we plowed right through it, came back, and now you can see it's holding it as support right now. So right now, this is a good support level because it's showing you that it popped up, came back down, held it right here, and after hours, popped up, came back, held it again, popped up. It's holding it again right now. So you're going to want to see what happens when the market opens up if it does truly hold again. However, yesterday created another point of control that's lower at 67.01.71. So if we do lose that 67.61.95, and then we lose this February monthly low at 67.51.5, I'll probably get rid of this gap, the gap down that was from the close from Friday. However, you can see that that's not a bad level. I may leave that up there also for today and see how that responds there, because that may be a decent level. But if you do lose that level, I think you're going to come down here and quickly fill this 67.01.71 open point of control from yesterday for a level of support. And then you have a 68.84.5 level, which is a weekly low from November 24th, low from last year. So that's it on the downside. And again, pay attention to these moving averages. We're still below the 20-day SMA at 68.71.13, below the 100-day at 68.93.73, below the 50 at 69.21.46. In order for me to feel comfortable on really being long, you're going to have to regain all these SMAs up, these simple moving averages on the way up here. So we're still getting some resistance here. First things first, you're going to have to regain this January monthly low at 68.14.5. Also, it coincides with September of 2025 monthly high. So big level up there. Got to get through that level in order for us to get some upside today. Anyways, let's get over to the SPY. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, and like this video. SPY is going to be an identical chart, right? So different numbers, identical chart. Same thing. Below the 100-day SMA, below the 20-day SMA. 100-day SMA is sitting at 682.04. 20 days sitting at 685.30. 50 days sitting at 687.86. In order to feel comfortable on the longs, got to get above those SMAs to move higher. Otherwise, we may be just in a channel. Created a point of control, open point of control at 689.33 yesterday. We did fill a point of control yesterday again. Same thing, 12:15. Filled that to 674.23 point of control. You can see same exact thing, like I told you, identical chart. supporting that point of control that was filled yesterday at 674.23. Must hold that, and when the market opens, in order to continue to get upside. If you lose it, you'll come down again. This gap down from yesterday looks like a pretty decent level. If you lose that, you come down here again to this December monthly low at 671.20. Lose that, you come down here to fill this open point of control. 669.33. Below that, you have 667.34, which is September's monthly high. Again, but we did support that 200 SMA down here at 656.87. So that's pretty positive on the upside here, though. But anyways, let's get over to the NASDAQ again. Please subscribe to the channel, hit that thumbs up button, and like this video. So the NASDAQ is really fighting, though. NASDAQ's closer to the 20-day SMA, which is promising for the upside here. So if the NASDAQ can regain this 20, I'm liking the push to get back up into this 50-day SMA. The 20 is sitting today. We're going to call the 20 today sitting 24,971.68. If you can regain that on the market open, I think you're going to push into this 25,152.25. This is a channel line that I've had drawn here. I'm not sure when I drew it, but it's up there, and I've got it's a thick line, so I've got that up there for a reason. I just don't know how far back I drew it. And then if you can get through that 25,152.25, you push into this 25,270.75, which is September 2025's high. And then above that, you're going to push into that 25,367.65. It's a 50-day SMA. And then above that, you're going to have some definitely some headwind up here. I would say 25,414. It's 25,430, I would say. And that is January 12th low. On the downside, I would say you come down if you lose this 24,826.24, which is the open point of control level that we filled yesterday. Again, same thing, filled it at 12.15. If you don't, but this is the same thing. It's holding that level again pre-market. So all these charts are going to be identical. If you hold this in the regular market, it's going to be a good level of support. If you lose it, you come down to this gap down from yesterday, 24,657.86. And if you lose that, you come down to August high at 24,495. And then if you lose that, we created an open point of control from yesterday down here at 24,403.71. And then it also comes in line here with this with this regressional trend line that I drew from October 30th of 2025, which is an all-time high. Down below that, you have July's high of 24,300 for some support. You can see yesterday it gave some decent support down there as well. So hopefully we don't give this big move, but this did definitely create a speed zone here yesterday. When you have no sellers and it goes straight up here. So if you lose this 24,826.24, and the same thing on the other charts that I just went over, I didn't cover. When you get a big move like this, it creates a speed zone. So if you must hold this level. The same thing on the other charts. If you lose this level, I think you quickly move back down here to this gap down level at 24,657.86. So same thing on the other charts here. This big speed zone here on the ES. If you lose this 67.61.95, you come down to that 67.41 quickly on the ES. So same thing on that. Qs are going to be identical. You can see the same thing on the Qs. We had, actually, I did not mark out the point of control yesterday, but you can see, I'll mark it out in front of you. You can see where it comes in. Boom. Here's the point of control from yesterday. I'm just going to mark it as yellow to move it along. Boom. You can see this point of control right here. Same exact chart. It's really kind of incredible, actually, right? Did create the point of control from the 9th yesterday. Down here, sitting at 559.76. So same thing, speed zone here. If we lose this level here at 603.57, quickly going to give back that big move up, come back down here to the 600 level, to 599.76 level, and then if you lose that level, you come down to 596.41, or the monthly February's monthly low at 594.76. So, anyways, that's it for the futures and then for the SPY and the Qs. Let's get into Tesla. Again, if you're new to the channel, subscribe to the channel. Hit that thumbs up button. Like this video, fellas. and ladies, if they're there. And also go down in the description and join our Discord community for live trading from 9:30 a.m. to 11 a.m. Eastern time. Tesla, interesting morning on Tesla. Those of you that were in the trading room saw that great trade that we had in the morning. I'll go over that in a minute, but let's go over these levels. So here's the 200 SMA. This is a trade that we took in the trading room yesterday, right out that 200 SMA in the morning. Had a nice little rally there. Same thing from yesterday. Here was a point of control, got filled at 215, and now the same thing right now. It's kind of holding it. It was holding its level in pre-market, and it's actually holding a little higher right now. However, we did create a point of control level, 389.87 down below, which is actually below the 200 SMA. So I really don't want to see that fill today. I'm kind of hoping that the market kind of stays in a little bit of a channel here, and then this point of control will rise above over the course of the days, and the 200 will drop below it. So the point of control, if it does fill, it'll still be above the 200 SMA. I don't want to lose that 200 SMA anymore. But anyways, getting back into Tesla right now, I think, if you could get above, I'm going to say this pre-market high here today, looking at things, if you can get above this 404 level, I think you can move. I would say probably make your way into this 20-day SMA, sitting up here at 409. It could be good. I don't see a lot of resistance up here coming in up here. I think there was, same thing. You got the speed zones on the downside here. So I think if you can make your way up here and you can regain this 404 level, I think you can move up into this 409 level before you get some resistance. But on the downside, here's yesterday's close. If you lose that, if you lose yesterday's close here at 398.61, I think you could pull back. Your first level you pull back to is this 200-day exponential moving average sitting at 395.75. I like that level possibly. You can see what it's done in pre-market right now. It's holding that pretty well. That's a pretty decent, that's a good first level. Or I don't mind this February 1st, 2025 high level here. You saw in pre-market yesterday how it respected it. And then again, we pop right through it. But same thing on this big purge up yesterday created a nice little speed zone. So if we do lose this 395.75 level, if the market does sell off in the morning, there's going to be a speed zone here. I think we're going to quickly move down. I think we'll probably blow through that 394 level, come down and test that 200 SMA. And if we don't hold that 200-day SMA, I think we come back down here and hit this point of control level at 389.87. Maybe not today, but it's early in the week, so there could be a lot that happens during this week. Do I think that the lows are in? I would just be pretty surprised if they are, and something really dramatic would have to happen today for me to be confident that the lows are in. I don't see that. I mean, I think if you just take a holistic view on things, looking out. Let me just try to clean this up for everybody here. We're still trending down here, right? So there's nothing that I look at from Tesla on a Tesla's view to make me think that we're looking at something like this, right? If I'm looking at something like this, like if we do this, and now I look at it, I say to myself, well, yeah, maybe we are moving higher now, right? But if you look at it like this, from a holistic view looking down, there's nothing really telling me that we're out of the woods just yet, right? I think in order for Tesla, for me, to really feel comfortable for getting out of the woods, we have a lot of work to do. And I think our first level, to really feel comfortable, we're probably going to have to get above this 415.78 level. That would make me feel, okay, well, now I think something's really happening. But I think for starters right now, I think there's still a lot of headwind here. You've got some, you can see these lows here, these lows, they became now a level of resistance. A low here, lost the low, tried to regain it. Now it became resistance. So these are break and retest levels here. So I'm not comfortable with Tesla going, long-term long yet. until we get above 415.78. Now, that being said, I am overall bullish on Tesla for a long-term portfolio. That's different, but on this account that I trade on every day, this is a short-term account, trading account, day trading account. It's 100% cash every day. So if you go to the if you break this down now to the 15-minute, 15-minute looks a lot different than the 4-hour chart here. So now what happens is I had my holistic view of the chart. So now I know I'm looking for my levels here. So Tesla, so I could technically just sit back and just set an alarm up here, and I will anyways, just set an alarm right there and don't have to go near my computer. And if Tesla gets up to this level, I know to myself, okay, well, this may not be a bad level to take a short. Or you could take it another way. And if I mark a level over here, if we get above this 407.19 level, okay, well, maybe I want to take a long into that 415 level, right? There's all kinds of ways to take it. Or if Tesla pulls back, maybe you could take a long down here at this, maybe at this level right here at this 390 level, right? So there's all kinds of ways to play it. But anyways, the best way to look at things when you're looking at a chart is to always look at the longer term charts first, because that's going to give you the overall trend, right? So that being said, let's take a look at what I'm going to do for today. So for today, I'm going to have tomorrow's expiration date up here for the calls and for the puts as well, which is 3/11. And I'm going to start with the 400 calls. So it'll probably be in the money. It will be in the money a little bit right now because of where we're at 400. And, the market closed at 396. So I'll see where where the premiums open up. If they open up, a little more expensive than this, I may increase the call price so I can cheapen the premium so I can get a bigger bang for my buck. I'm going to leave the 395 puts up here for today. And so this closed at $4 yesterday. So because we're higher than the close, this premium price will be a little lower, right? But let's take a look at the 5-minute opening range trade from yesterday. So when we were in the room yesterday, we had a nice, we spoke about the way it was trading yesterday. We had some good solid candles. We didn't have the wicky candle. So why is that important? Well, when you have a good solid candle, the premium prices, they're more stable. They're not so volatile, right? So especially if you buy yourself more time on the expiration date. So yesterday I started the morning with March 9th expiration date, and the premium prices were just flying around. They were moving 30, anywhere from 25 to 30 cents a whack every price movement, and it was just too volatile. Normally it should move 5 to 10 cents on a price movement, but like every kind of wick, these kind of any kind of wick, if you had a big price wick on this, then your premium price is going to, depending on what side you were on, your premium price was either going to rapidly increase or decrease, based on what side of the market you were on. So you really don't want that when you're getting in the options trading. So you have to see how the markets are trading in the beginning of the day. You want to see a good, solid, one-directional type candle so you can make your decisions. So that being said, yesterday's range on the 5-minute range yesterday was 389.50 on the downside and 392.99 on the high side. So that was a nice little range. Once you broke that range on the second 5 minutes of the day, you would have made your money immediately on this, within the first 10 minutes of the day, you could have been done with your day, right? So so what I did yesterday, this is the 200 moving average was sitting right here yesterday. So on the first 5 minutes, and the market opened, those of you that were in the trading room, I said, I like this. I like selling this short. I had a short bias yesterday. I bought puts on this first 5-minute candle moving up on this 200 moving average here. I thought that was a good level. I had a short leash on it. I bought puts here. The market popped up a little bit. I got out of that trade immediately. However, in the second 5 minutes, I saw it was starting to reject again, and I bought the puts again. And then I made my money on that candle on the way down before even the 5-minute break. If I held it, I would have made a lot more money than I did. However, it was still a very good trade. But anyways, this is a more advanced trade that I took right here, other than the basic 5-minute break, right? But let's get into the 5-minute break. So once you had that range here, the 389.5, and you broke that 389.5 on the second 5-minute candle, on that second 5-minute candle alone, you could have gotten yourself a couple dollars on that premium there, right? So if you could have gotten $2 on that equity price, which would have yielded you $1 on your premium. So for every one lot that you bought on your price, so for example, if you bought a one lot here at, let's say at 400, it cost you $400, and you got a $2 move on this premium price would be up to $5. You would have made $100 on just a single one lot, right? But now you can see that it broke that, it broke the range there of 389, and the low on the day was 381. So you could have gotten roughly $8 out of that move. So that represents, just a guideline, $4. You can cut it in half, right? So $4 you could have made on that premium. So if you bought it at $4 and you held it all the way down here to 381, which, chances are you're not going to do that. But if you did, a one lot, which cost you $400, you would have gotten, $400 on that move, right? It cost you $400. It would have rallied up to $8, which would have been $800. You sell it there, and you sell it for $800, and you made $400 on it. And it's a pretty basic concept. It's a little more advanced than that, but that's just the basic trade setup of which we try to explain there. So anyways, that's what I'm going to do for today. Again, if you're new to the channel, subscribe to the channel, hit that thumbs up button, like this video. Hit the word more down below, and open up the description so you can join our Discord community for live trading from 9:30 a.m. to 11 a.m. Eastern time. Hope to see everybody in there, and if I don't, we'll see everybody tomorrow morning for the pre-market analysis tomorrow. Have a great day. Talk to you soon.